Welcome to the Ideal Investor Show. Challenge your mindset and discover where you are. Let's go. Hello and welcome to another episode of the Ideal Investor Show, where we talk about abundance and oftentimes have good guests for interviews. But today I wanted to talk about something that has to do with market volatility. And how can you actually sleep well in volatile market times? And it really depends a little bit on what market we're talking about. But if you think about it, if you look at the stock market, it can be pretty volatile. If you look at the crypto market, it can be pretty volatile. Even, which is kind of unusual, even the bond market lately can be volatile because there is oftentimes now anticipation if the interest rates go up or down, and that has impact on the bonds. And volatile doesn't mean there's a little bit up and down, but volatile means that something has been steady or maybe even going up slightly and then suddenly loses 10, 15, 20, 25%. And then maybe starts creeping up slowly again. That kind of volatility. And what I learned is it really is ultimately a matter of two things. Of perspective is the one thing, and discipline is the other thing. So first, let's do discipline. So what I oftentimes have said, what I'm teaching in our mentoring program, in any kind of training program, is you set yourself a goal and you determine how you will accomplish that goal from an investing perspective. I have oftentimes mentioned this book, The Richest Man in Babylon, and if you were to read it and take basically the gist out of it, it says take 10% of every money, any amount of money that comes to you, whatever the activity was that made the money come to you, and put it into an investment. You can save it, you can invest it in the stock market, in gold, silver, diamonds, crypto, stocks, it doesn't matter. Take 10%. Now, nowadays, and especially if you're younger, I would actually recommend take 20% if you can. And take it right away when the money comes in. Don't wait until the money has spent and then hopefully there's 10 or 20% left over. Take it right away. Now, I recently saw a pretty lengthy interview about this topic with Kevin O'Leary, also known as Mr. Wonderful from Shark Tank. And he said in his particular case, and I know you might say, well, this guy is wealthy and stuff, but he was not always wealthy. So he, based on what he learned from his mom, decided what is the amount of money that if I have it, I will never have to worry about money. And for him, that number was $5 million. So one of the goals that he set for himself is make an account with $5 million, and I think his $5 million are in an index fund, like the S&P 500. And he put money aside, and ultimately had $5 million, and that's what's sitting there. And he's basically doing nothing with it. Now, when it jumps higher, significantly above $5 million, he sells some, because it doesn't really need to be more than that. But that's the untouchable amount. So that is basically discipline. Now, am I saying you should put $5 million in an account? No. But you should decide what is the amount that you can take away from every money that comes in. Is it 5%, 10%, 20%? The higher, the better. And apply it to some sort of a savings and investing account. So that is the discipline part. And then the second component is the perspective. And I want to give you one example that applies to me when it comes to the stock market. I am very grateful still to this day, and I will keep saying it over and over again, that I kind of stumbled upon a guy named Tom Nash, who came either, I think, from Ukraine or Russia or stuff like that to the United States, was an investment banker, whatever. He has a great YouTube channel and an academy. And in 2020, I stumbled upon his YouTube videos. And he was talking about really committing to a company that is in an industry that you believe will have a long-term future. And one of the names that he mentioned where that applies, according to his view, is Palantir. And so he mentioned that Palantir a few years before had come onto the market at $40 a share and then went through a bunch of volatility and ultimately went down all the way to $8 a share. And I just happened to hear about it from Tom when it was, I think, around 10. So I, like I said, am very grateful to Tom Nash. And I had a little bit of money that came to me from work that I did for a client organization. And I took $10,000 and invested it in Palantir. So I got a little less than 1,000 shares at slightly less than $10,000 were bought in 2021. And if anybody wants to take a look at it, the company, and it depends a little bit when you're listening to this. I'm recording this episode at the beginning of July 2025. So about 4 years later. And the last I looked, and I'm not somebody who's looking at the price for stocks on a regular basis, maybe, every few months or so. But the last time I looked, the stock was at $130. Right, so if you say 1,000 shares, so it's basically $130,000 out of the $10,000. Why am I mentioning this? This is not to brag or anything like that. And I can clearly see, yes, I'm thankful to Tom Nash, but I didn't really do anything. He found the company. He convinced me that artificial intelligence, AI, will be the future. And obviously, if you agree, and we all have seen and constantly see on a daily basis that he was right, that that's the future, then you want to be invested in one of the leaders of that revolution that's going on. But the point that I'm trying to make about this concept of perspective is we spoke about discipline when you regularly put money aside. And then we talked about perspective in the context of being able to sleep through volatility in the market. Now, just imagine for a moment that Palantir at $130 would lose 20% or $26 of the share price and would go down to 104 or 105. All the papers, all the online stuff, Yahoo and whatever, CNBC, they would all, Palantir is collapsing. But for me, 4 years ago, I spent $10,000, and even if it were to collapse, my $10,000 would still be $104,000 or $105,000. That perspective, to say I had the discipline to invest and stay with it because I believe in that particular company and in that particular industry, lets me sleep no matter what. And if it loses 30%, then it's still $90. And I pay 10. That's the perspective. And when you ask yourself, how do I gain that or get that perspective? The main way you get the perspective is through the discipline with sticking with your convictions. If you believe Palantir is a company that does great stuff and that has a great future, you have no reason to sell it. Just like I stuck to it. If you believe, like I do, that residential real estate, like it has for generation after generation after generation, provide wealth over time by other people being your tenants, paying off your mortgage and building a wealth portfolio for you that is ultimately going to give you cash flow, allow you to reach your time freedom point and beyond. And for the next generation, they can start or inherit, like in my case, current state, a 10-property investment portfolio. So that's the perspective. It takes time and it takes discipline. And when you then look at the perspective and you can say, okay, I was patient enough to have significant gains, then all that noise that happens in the background, in the media, on YouTube, about volatility and markets up and markets down and the president and the tariffs and you name it, it all doesn't matter. Because your perspective is completely different than any perspective that anybody else has. That's it for today. Be well and stay safe, and I'll talk to you tomorrow.